We have talked about the storyline. We have talked about the types of SNR levels. Now we're going to be talking about how to establish a storyline. So we talked about what is a story. We say that the way you're going to structure the story, you're going to structure it in a series of events that you're going to have an introduction, you're going to have a body, you're going to have a conclusion, or which is the beginning. You're going to have a beginning, you're going to have the middle, and you're going to have the ending. So now we're basically looking at the beginning of the storyline. There are one of the most important things that you should understand when you get to the storyline. There is a candle called the next candle. So it's not something new. I just decided to name it like that because if you can say the way that they use the expression or the way that they use it is just very different, but it's just one and the same thing. So now when you get to the next candle, so the definition of this next candle is just a candle used to signify a refusal or denial of an SNR level, which is the first confluence that you're going to be looking for you to even get a trade. So with that mindset now, the first thing that you should want to identify when you want to get a storyline, you should identify your SNR level, which is, let's say, something like this right here, which is what? A V right here, a support. So the next candle is just something very simple. It's just this. I know people will say that I just stole something from someone, but it's just one and the same thing. I just decided to call it the next candle or something like that. Because if you can say monthly, reject the monthly, but if you can just write it down, monthly next candle, you would know, generally you would know that, okay, we have a monthly candle rejecting a monthly SNR. So simple. We have the monthly next candle right here. So what I mean is, this is the refusal right here. The market tapping this support right here, then failing to close below this, close right here, or close below this level right here. That's what you call the next candle right here. This is what you call the next candle. So let me just show you another example. So right here, what do we have? So what we have right here, what is this right here? So we have this support right here. We have this support right here. So, but this candle is not closed. So we just wait for the close of this current candle. Okay, this was support. This was supposed to be support right here, but the market closed below right here. Then this is going to become the resistance. So after the market closes right here, we are looking for the next candle. So here, what are you looking for? We're looking for a rejection occurring right here, a refusal occurring right here. The market signifying that there are more sellers right here than buyers to the upside. So from there now, what you're looking for after the close of this candle, you're going to be looking for other confluences. So here we do have a what? We do have a resistance right here. So let's just let the market run a bit. So look at this. Well, this is the next candle. No, it wasn't. Just because here it closed above right here. It closed above this area right here. So we would wait for another next candle, then you start looking for your buys. But this one was a clear next candle right here. So which means that you can even look for some buys right here, but with some confluences, because these are not the only confluences that we use. So another next candle, and we have other confluences, just showing you the first confluence that you're going to be looking for. So right here, let's just go to the weekly time frame and look for some examples. So let's just start right here. What do we have right here? Go to the line chart. We have an A right here. We have a break and retest right here. We have a break and retest again right here. We have a V right here. So what are you looking for? So looking at this now, we see that here the market closed below this. Then it gave us some rejection right here, but you can see how the market did here. But we're only going to be looking at this close right here. So this one is a bit confusing, so we can just leave it out. But right here, what do we have? We do have our next candle right here, because this is the support. This is the support right here, open close support, next candle. Then we can even start looking for a setup and so forth. And then here, what do we have? So here we had our next candle right here. So what are you looking for? Sell opportunities with some confluences. Then again here, you see that it failed when the market closed above right there. So you can use the other one right here. So you're going to be looking for your sells right there with some confluences. Then close in proximity. Let's identify those area. We can see that there's a band right here, which means that we have an open close right here. There's another band. Then here, the close in proximity one. So you can see that we have another one right here. Then, okay, so we had our next candle right here. This was our next candle. Then start looking for sells right there. From there now we can even start looking at the daily time frame. So when you get to the daily time frame, you do the same thing. So you can see that there was another next candle right here. This was the candle refusal right here. So you see, we went to the upside, but we tapped this daily time frame SNR, but we closed below right here. So meaning that here the market was refusing to do what, to go to the upside, meaning that there are more sellers than buyers. So here you're going to be looking for a setup and other confluences. Then again here same thing applies, but with other confluences that are going to be added in. Then here close in proximity, we have this support right here, open close candle, as you can see. So it was not tapped, so it's still fresh right there. So here, okay, so we had our next candle right here. So after we identified our next candle, we saw the market sending a bit. Then here we see the market tapping. Then again here you can see what we had, another next candle and another one right there. But the most important thing, at least if you have one next candle occurring, so here we do have one here occurring right then. Then here we had that next candle. As I told you, this is the first confluence that we're going to be looking for, that next candle right here. But now, which means that some of the confluences were not met, or it was just simply a loss, you see. So yeah, that's how you're going to use your next candle and so forth. Now let's look at what? Now let's look at the time frame combination, the other confluences that we need. And this is going to actually build a bit of understanding when you're looking at this SNR levels and other things. So the first thing that you should understand when you get to our time frame combination, let me just write TC, time frame combination, we do have a what? We do have a storyline. Let's just start with the one that most of you understand. So we do have like the external structure. We have an external structure, then we have an internal structure. So if I'm talking about the external structure and internal structure, I know what you're thinking about. You're thinking about the liquidity cycle, the primary analysis. That here, what we do have like the monthly time frame as the external structure. So we're going to have the weekly and the daily time frame as the internal structure. So as the weekly time frame as the external structure, we would have the daily time frame and the H4 time frame as the internal structure. Then when you get to the daily time frame, you're going to use the H4 time frame and the H1 time frame as the internal structure. Then H4 time frame, you would use the H1 and you're going to use the M15 time frame as your internal structure. So with that mindset now, didn't want to change a lot of things. I just wanted to get something that's going to be simple to add into my arsenal. So realize that once you understand that there's a storyline occurring at the what? There's a storyline right here occurring at a higher time frame at this external structure. There's a storyline occurring, then you can use the setups. Then you can use the setups of the what? Of the internal structure. Then when you have a what? We have a next candle right here. And you have your next candle right here. This is the one that I want to focus on right now. You would identify the fake breakout structure right here. Still have the fake breakout structure or the breakout right here at the what? At the internal structure. So if you identify what? If you identify that next candle right here, let's just go to the monthly time frame. So if you identify that next candle, for example, just like this, that next candle right here. So I want to do like this. Then after the market has given you that this next candle right here, you want to identify what? You want to identify a breakout occurring at the what? At the daily time frame or at the weekly time frame. So once you identify that breakout, then here you are good to go right here. We do have that breakout. We have another one right here because it was even clear at the line chart right here, but let's not talk about it. We're going to talk about it in the next video. So here we're going to be looking for what? Buy opportunities to the upside with the setups and so forth. So as you can see here, we had our setup at the daily time frame. So let's just find another monthly time frame example. So which one is log? Okay, let's just look at this one right here. Let's look at this one right here. This is support turning to resistance. So wait for the next candle to occur. After this candle has occurred, so this breakout might occur when the market is presenting this next candle, or it might occur after. But as long as we have the breakout, so let me show you something. Here at the beginning of this month right here, which month was this? So it was June right here. It was June. So this breakout right here can occur after the next candle or can occur during the next candle. So what I mean is, here as the market is presenting this next candle, if this breakout occur right here, if this breakout occur or fake break of structure occur right here at the daily or the weekly time frame, you can use it. So right here, what do you see? Going to the line chart again, what do you see? See the market breaking out right here. Then here you're going to be looking for your opportunity right there. But this is the first break of structure, so which means it's going to be what? It's going to be endorsement. So same thing applies right here. But now we can see that the first break of structure right here was here. So this was 1st of June. Remember, the start of the next candle at the monthly time from the market presented a breakout right there. Then it presented another breakout right here, break of structure, Sunday break of structure. So this one was the first break of structure right here, which is the fake break of structure. You don't want to take a trade during this this range right here. So from there now you can even start looking for your selling opportunity, because we are in sales right here at the monthly time frame. So until the market reaches for another monthly time frame key level right here, just like this. So you're still looking for sales. So if you were able to capitalize on the sales right here, your final target would have been here. So let's just look at the weekly time frame now. Let me just show you an example with the weekly time frame. So weekly time frame right here, we do have this support right here. We do have this support. Wait for the next candle. Close right there. So here, look at this. So this is our next candle. First confluence that you want to see. Our final target might be here or here if you're going to be taking those buys right there. So this is our first confluence right here that you might even be looking for buys. But remember, in the time frame combination, we're going to use we're going to use the daily time frame and the 4-hour time frame. So in the 4-hour time frame, we can see that here we had this fake break of structure right here. You can take a trade during the first break of structure. So you can also go to what? We can also go to the weekly time frame. Weekly time frame right here, we had this first break of structure occurring right about here. Let's see. Okay, the week started right here. So this is the first break of structure right here. We don't take these trades right here because the market is not what? The market has not closed in this next candle right here. Then after you have seen that, then this is when you can even start looking for your buy opportunities to the upside. So you can start even looking for buy opportunities to the upside until the market reaches your final target. So as you can see, simple and straightforward. Now let's go to the daily time, the weekly time frame again. So we have this next candle right here. Let's see the next candle. So it was the next candle. Did we identify a breakout occurring right here? Let me just show you what it does when it fails. So we had this next candle right here. So we are waiting for a breakout to occur with this candle. Let me see. Weekly time frame. So right here, I want to see some. So this week started right here. It ended right here on Friday. We had a breakout occurring. The reason why I tell you that you should wait for endorsement right here, or should wait for a second break of structure. You don't take your trade at the first break of structure. It's just because of this. You see, most of the traders would have identified this as a breakout. Then they would have identified a key level or something like that and looked for some sales right here. But as you can see, the market failed at that area. Then here now, let's look at the what? Let's look for another one right here at the weekly time frame. Weekly time frame. Did you look at this one? So let's just look at this one right here. Let's just look at this one right here. So what do we have right here? We do have this resistance right here. We do have the next candle right here. First confluence. Then after that, we're going to be looking for what? We're going to be looking for a breakout to occur. So you go to your weekly, go to a 4-hour time frame or a daily time frame. So what do you see right now? So with this candle, you can just do like this. Do like this. Alt V if you're using like Windows. Then here you can see the Monday was here. This is the word candle occurring, and I told you that the breakout can occur during the creation of the next candle. So which means that this is the first break of structure. This is the market sweeping it right here. So we can even look for another opportunity or something. Then here direct pullback. So there's some confluences. You can even enter the cells right here, going to the downside. And you know that if you entered from the weekly time frame, you're most likely going to take out most of your partials or profits at the what? At the next weekly time frame support and resistance level. So as you can see, we saw some reactions occurring, but still the market sold to the downside right then. As you can see, it bought right here, next candle, confluences. Again, you see the market going to the downside. So let's go to the daily time frame and I will show you an example. So in the daily time frame. So the daily time frame, let's just look at this one right here. It looks a bit clear. Now we have this resistance right here. Wait for the next candle. As you can see, we had it right here. And I will tell you why you would have targeted this low right here a little bit later. So here, this is the resistance. This is a new candle right here. This candle. So we're going to use the H4 and the daily time frame, H4 and the H1 time frame for a breakout. So is it clear right here? There was a breakout, but in terms of the liquidity cycle, there is no breakout right now. So if you look for an opportunity, it's okay. So we had this breakout. You don't take your trade at the first breakout right here. Then you wait for another breakout to okay, because pull back just like this. And you can see with the wick right here, to look for sales going to the downside. So even targeting something lower right here, something down right here. So you see, it's very clear. So when you want to establish a storyline, what are you looking for? So you're looking for the next candle. Then you're going to be looking for what? You're going to be looking for a breakout. And that breakout should occur in terms of understanding the next candle and the fake break of structure. So if you're going to identify the next candle at the daily time frame, we can never go to the 15 minutes time frame. We should use the what? We should use the H4 time frame and the H1 time frame to identify the breakout right here. Then after this first break of structure or the breakout right here, then that's when you can even start using your MACD setups and so forth, all the setups that you have in your liquidity cycle in algo trading and so forth. So you can even start looking for setups. So you see that it's very clear, straightforward. So we are even going to be talking about how to combine this with your setups, but let's just finish this video, and in the next video we're going to be talking about a different topic.